Wow, what a day on the market. First of all, it started off crazy to begin with because it's earnings season, and there was a lot of ups and downs, some good earnings, some bad earnings. Some stocks were going up because of their earnings, like a couple that we own. Proficient was up 11%. SPGI, which is S&P Global Data, it's kind of a data provider. It was up, I'm not sure how much exactly. It ended up 5 for the day. But it was up more, I think, earlier. Activision was starting to act well too. It was up over 5%, but then it was only up 3 by the end of the day. The market was, doing okay. I'd say acting normal, but a little bit more crazy than normal because of earnings season. And then Trump says we're going to tariff the next $300 billion, or I think it's the remaining $300 billion of Chinese goods. The market just did not like that, and in stepped the gold. Okay, so gold is a flight to safety. Gold is an asset. Let me talk about some bears and bulls and skeptics and things like that. And I'm a little bit of a skeptic, but I've managed to put that aside and tried to be a prudent investor and own them anyways. I'll tell you kind of why I think when you follow me on the bull and the bear. So bulls say, hey, it's a currency, it's something you can go to no matter what. It's better than owning cash because it's a kind of like a world currency. You can touch it, you can feel it, you can own it, and it will always have value because it's like a trading currency. You can always exchange it for goods. I don't always buy that argument. I just look at it, and many of my colleagues that are investors do the same, and they'll say, I don't understand why an ounce of gold is worth $1,400. It has no real commercial value in the sense that it's not like copper that we use in pipes or iron that we put in buildings and things like that. And gold is it's not really used for anything. There's a little bit of use in semiconductors because it is a good conductor of electricity. So there is some gold in all those semiconductors, but it's so small that it's hard to. It doesn't even affect the world price of gold. And I will say gold's got a really interesting property in that it's really malleable, and that it really, like, you ever see gold foil? Like, you can get gold smushed down to within just a few atoms. It's incredible in that regard, and it still stays together as like a foil. Okay, so there's kind of like the thoughts on it. Another problem with gold, investing in gold, is that it takes 7 years for a gold mine to become cash flow positive. So by the time they fly over and scout out the site, start doing the drilling and doing the testing and see how much gold they think is in there based on preliminary testing, and then more substantial testing, and then actually drilling. And drilling can often be into rocks and all sorts of things, and they're usually in remote areas, and you got to bring in equipment and roads. Even you got to build roads just to bring it out. It's a 7-year endeavor in general. Okay. So a lot of gold companies have no cash flow. They got a mine here, maybe one producing mine already, and then one's coming down the road. And the gold they'll just trade based on what they think is in the ground, and what and then do the math. Well, we think it'll cost this much to get out, and then the price of gold is this, and then we just kind of do this math and come up with a price. And I find that hard. I don't like those ones. I find the ones that are already producing. And a lot of my colleagues will do the actual opposite. As soon as the mine starts producing, they're like, it'll never be as good as it was touted to be, and they sell. But because we have a good financial model, we're pretty good once it starts producing to assess what it's worth. Okay, and we've actually done quite well with gold. We don't buy everything, that's for sure. We are very picky. So, without further ado, I got 5 here. I couldn't do one separately each separately because it would just take too long. And I want to do this kind of rapid fire style and just get quick just you can see why we're going to use our model. Make sure you look at it and see the difference, because you kind of want to know what you're buying and if it's for you. And it'll make sense, I think, as we go through it. Okay, so in no particular order, just kind of the order I kind of just ran them. All right, so the first one is Torex Gold. Torex Gold, as I described, right? There's no cash flow here for many years, and then all of a sudden, the last few years, they're earning 6%, 5%. Now it's up to 9%. I love that. I personally love that. I can see the rise in return on capital. They're getting the gold out of the ground now, and they're making a return on it. So it's only a $1.1 billion market cap, earning in EBITDA about almost 200 million, so 191 million. That's 7.95 times. One more, we want to know where it is. That's always important. Jurisdiction's important in gold. I had this on the tip of my tongue here. Developed primarily gold, copper. Mexico. Okay. So Mexico's not too bad in terms of a world stage, in terms of geopolitical risk. It's not perfect, but it's not Africa, and Africa can be really tough. So that's pretty good. That's one that we like. Okay, next one. B2Gold. Again, we're just doing these in no particular order. It's a lot of it is in Colombia, so I'd say Colombia is riskier than the previous one, Torex, which is in Mexico, but it's got a longer history and a better history. 13%. It did slip a little bit to 9%, but still producing pretty good. Shares were up, by the way, 8% today. It's a $3 billion market cap, good balance sheet, not too much debt. We're looking at, we think it's worth at least $4.24. I could probably tweak my forecast a little bit and get a little bit more out of it, but I'd like to be a little bit conservative. But B2Gold is definitely one we've supported for many years, actually, because it's always had a cash flow that we could sink our teeth into. Okay, next. Oh yeah, I should have saved this for last, but that's not how I'm doing it. I'm doing it random. Okay. Kirkland Lake. Unbelievable. This is my kind of company. Okay, so a little bit of a head fake, earned 14%, then kind of petered out, but they also end up making an acquisition, so put two together and started producing cash or gold, and of course the cash flow came and went from 10% to 15 to 19 to 22. You don't see gold companies producing 22% return on capital. My other research and talk to my colleagues say this is the low-cost producer. Somewhere, I hope I don't get this wrong, but I'm going to say it anyways, around $400 an ounce to produce. Gold trades at $1,400. You literally make $1,000 an ounce on this. And I think they're producing 1 million ounces. So that's a lot of money. It's a $9 billion market cap at this point. Shares are up 105% in 1 year. They're up 8% today. I mean, you do not get a better gold mine than this. You just don't. You just do not get a better one. I mean, the only thing is, are you chasing it? That's your only question you have. It's up 105% in the last year. It's on a 5-year CAGR. It's up 66%. So that's 66, and then 66 on that, and then 66. It's stunning. However, our math says it's still not done. And it's one of the best. Okay, there you go. See, I'm telling you, each one of these have a little different personality. Pretium. Pretium's a small cap. $2 billion, well, $2 billion, not that small. I want the jurisdiction here. I had it a minute ago. Where is it? Americas. And I think this was this BC. Excuse Bruce Jack Project. Yeah, I think that's BC. Okay, so that's actually a very good jurisdiction. Again, look at how long it took for them to earn money. In existence for many years. Just starting to earn a return on capital now. And it's climbing, so it went from 7% to 8%, not huge. We're just going to keep a low forecast, and we still think it's worth $16. trading at 11, was up 5% today. It's also been up 49% in the last 3 months. So people are going to gold as they sense, you know, the market's been rich and there's potential potential recession on the horizon globally. It's global slowdown. That's kind of that's a time for gold. Okay, moving on. What have we got next? We just did Pretium. We already done Torex. Oh, we're missing Barrick. Okay, so Barrick. Here we go. So Barrick's a completely different animal. It's a mega cap, or as far as gold, it's $29 billion market cap. It's actually been pretty abysmal. The return on capital was really good in 2011, and then it just petered out. Look at the return on capital just crash out along with the stock. It's never really gotten back to anything. So why do we like it? Well, the bar's just not set that high, right? The price of the stock is low. It only needs to do a 7% return on invested capital to be worth much more, to be worth $21, trading at 16. That's a pretty low bar. Now they have to do it. Admittedly, they haven't been doing it, but stock is up 50% in the last year. It was up 4 and a little bit today. So they're all different. Like I said, pick the one that you think is for you, or maybe 2 or 3. You know, you don't have to just invest in one. It's not an all or nothing game, right? I think, you know, if you want to have a 10% position in gold, well, here's 5 names. Buy 2% each. There's nothing wrong with that. You don't have to buy all 10% in one. So I like them all. They all got their different personalities and pluses and minuses. They all were up big today, and I think if we, you know, have more global recession and more tariff and trade wars, gold's going to be okay. Thank you for watching our investment video. This is the same analysis we provide to our institutional clients. Want to improve your portfolio? Simply subscribe to our YouTube channel below, or better yet, go to our video website at video.fsavaluation.com and get access to the entire library.